It looks like a nice little trade that's setting up on Google. It's not going to be a big swing position. It's going to be a short-term scalping position. So what we can see here on the chart of Google on the daily chart, and we've got our range algo. The algo is on a week time frame, so reasonably higher time frame, and this cascade here, kind of dump and then attempt to close the gap, fail and come all the way back down. It's hit this particular line here. So this is some lines that the algo has drawn to create a range. The mid range is down here, the high range is up there obviously, and these are intermediary points. And the interesting thing is that the algo has calculated this level here as potential support, but this one here is a bigger kind of resistance area because it's the midpoint between the range high and this mid range. So this has been acting like as resistance as well as these moving averages. Take the moving average away. So what's the trade setup? Looking for price to, because we've hit this as support, we've tested this, closed this gap. We're looking for price to reach up into this kind of 141 area to test the underside of this breakdown, support, breakdown, and it looks like we're trying to kind of get over this area here, testing for volume to come in and maybe get up to here. So that's the trade, and that is not a bad scalp if we can get it. So 3 or 4%. That's a really good kind of potential return. The risk is that we kind of come back down to the 132 from where we are, and this area here fails to act as support as it did, and then we kind of come back down to this level. So that's the risk that we've got to watch out for. So the area that I'm going to be interested in defining my risk is going to be this candle here, which is broke down, came back, failed. This candle here is a red candle. We failed to close below this candle and the low of this candle and losing this line. So this now has become quite an interesting position of forming risk, in my opinion, which is that if price failed to push down below when it had the chance, and it pushed up, if it fails, if it tries this again, then the chances are increasing that it will fail. So while the price is above this level here, 134, actually looking for a retest of this 141 on the other side. If we look at some volume, let's put on our algos that look for volume momentum. How much energy is there in the volume, the buying or the selling? We had a bit of a pullback really, which is this, but then we had a little uptick on the daily, which means that if we go down to the lower time frames, we should see that volume should be picking up on the lower time frames here. And it kind of is. If we go a little bit further down, let's do my favorite intraday, which is the two. It's actually a little bit messy. This also measures overall momentum, and it's drifting downwards, which isn't a great sign. Let's see if there's anything on the slightly higher time frame. So this is a big push up, failed here, come back, and if this area holds a support, then that bodes well for a potential kind of push up. We are seeing on 15 minutes, this is nice kind of volume momentum signature. If we lose the mid-range of this volume momentum, I mean, the volume can drift down, it can dip, but what we don't want to do is for it to just carry on drifting down towards the sort of, the lower end. That's when you know that the buyers are not really present. So going to be watching the volume momentum on the lower time frames to see how the buyers or the sellers step into the market going out next week. Now the overall sentiment for March, the seasonality is negative. So overall, expecting prices to drift down going into April, May, but doesn't mean we can't get a little pop, which is why I'm interested in short-term swings rather than anything sort of too significant for the next couple of months. All right. So going to be keeping up with this. Some of our other videos have met target, which is or met target or met expectation, which is good. So let's see if this one does the same.